The U.S. dollar is lower to kickstart the U.S. session, 1 day ahead of the FOMC rate decision, where the Fed is expected to cut rates by 25 basis points. The Trump nominee, Mirren, has been approved as a Fed governor and will participate in the meeting this week. He did not resign from his position as a CEA head, and that may prove to be a conflict of interest. Nevertheless, the expectations are that he might dissent or would dissent for a cut bigger than 25 basis points expected. He also is an advocate for a U.S. dollar moving lower, outlining the advantages of it to the manufacturing base, and the U.S. dollar is indeed lower. In this video, I'll take a look at 3 of the major currency pairs: the euro versus U.S. dollar, dollar versus yen, and sterling versus U.S. dollar from a technical perspective as the dollar declines against those 3 currencies. So let's get started. When the euro moves higher, the dollar goes lower, and as you can see, the euro versus U.S. dollar is stretched to the upside. We did have some economic data. German zoo survey data came in better than expected. Industrial production was a little bit weaker, but the dollar's decline was pretty much started in the Asian session, and has continued up. The prices are moving toward the high price from the July 1st, which came in at 1.18289, currently trading about 15 pips away from that level at 1.1813 currently. If we get above this June or July 1st high, that would take the euro to the highest level, going all the way back to this point right here, which is in September of 2021. So a multi-year 4-year high for the euro versus US dollar would be achieved if we break above the 1.1829 level. And so be aware of that. Going back to the hourly chart, the risk level, or the closest risk levels, might be right here near the 1.1808 level. More conservative risk levels might be in this area right through here, with the high prices here and here at 1.1788 down to 1.1779, which was a high price that we saw in trading last week for this currency pair. So these are the risk levels for the euro versus US dollar for traders looking for more upside potential in this currency pair. Obviously, in trading last week, the price based against the 200-bar moving average yesterday, the price tried to move below the 100-hour moving average, only to find buyers push the price higher and above the August ceiling here. This is where the high prices for August, which came in between 1.1730 and 1.17419. This time, when the price moved above that level, we have seen increased momentum to the upside. So buyers in control in the euro versus US dollar. Take a look at dollar versus yen. And like the euro, the dollar has moved lower versus yen. In this case, when the dollar yen moves lower, the dollar moves lower. And you can see how the price tried to move above the 100-hour moving average, fell short of the 200-hour moving average, and that was all needed to start the move to the downside in the Asian session. We did move down into this swing area. The swing area is defined by a number of different swing lows coming through here. We're trying to break below it here, could not sustain that momentum. And then since that time, we've seen all sorts of support dips down to this area, including all through here, and even here. We did break below it trading last week, only to fail again. So 2 fails below this 146.54 to 146.80 level. And here we are back down into that area in the middle of it. Found with support buyers to push back to the upside. We're going to need to get below this level to increase the bearish bias. And if we do, you see this blue line way down here. This is the overlay of the 100-day moving average. It comes in near the low price that we saw in the month of August, near 146.20, 146.14 to be exact. Getting below that level and staying below that level would be important for the sellers to increase the bearish bias. This is what it looks like on the daily chart. You can see how most of the price action over the last 1, 2, 3 months has been in between both the 100 and 200-day moving averages. That's significant. It's non-trending. So getting below the 100-day moving average and staying below that level through here would increase the bearish bias. I have traders perhaps looking toward the 50% retracement of this move to the upside at 144.58 as the next key level. It would take on the top side now, looking at the dollar versus yen, it would take probably a move back above the 100 and 200-hour moving averages to increase the bullish bias for this pair. Closer risk would have been at this level for traders looking looking for more selling through this level through here. But as you can see, the price has been trading above and below that level after finding support buyers there. It's not unusual to see that type of move, but nevertheless, it brings more neutrality moving back above this level. But these levels would be key on the top side for the dollar versus yen if the buyers are taking more control. Finally, the dollar versus US dollar, that's stretching to the upside. We started that stretch yesterday, breaking above the high ceiling right through here. Number of different swing highs going back in time through here. Even last week, the market came into that area, found willing sellers not once but twice. So the ability to move above that level, come back into it, and find support buyers and trading here today, moving it to the upside is more bullish for this currency pair. It opens the door for a run probably toward this area right through here, where we had a number of different swing lows trying to form this ceiling through here. It wasn't a ceiling; it ended up being a ceiling, and then rotating back to the downside. Once we broke below this area right here, we came back up to it not once but twice right through here, found willing sellers, and that sent the price sharply to the downside. So this area through here between 136.73 and 136.82 is the next key target on the top side for the pound versus US dollar. For traders looking for more upside in this currency pair, obviously we'd need to get back below the August ceiling, or actually it's more than August. It goes back to July, and then August, even in September, the price. So it would have to get back below those levels to increase the bearish buys for those bullish people for the pound versus US dollar, those dollar sellers. So there you have it, a look at three of the major currency pairs to kickstart your trading day. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.